friends. This is Dr. Amarjeet Kaur, Professor of Accounting at the Department of Management, Gurugram University, Gurugram. It's my privilege, it's my honor that I'm here with you to talk about financial regulators in India. We would be covering this topic in couple of parts. So today I'm going to begin with part 1 on financial regulators in India. So, this pertains to the topic which we started couple of weeks ago about financial markets. Financial markets, as you would have understood by this time, they are part of economic system, any economic system. And so, financial markets, financial system is part of economic system. Within the financial system, we have many pillars, be it financial markets, financial institutions, financial services and financial regulators. We have covered all the other pillars of financial system, primarily financial markets, financial institutions, financial services, financial instruments. And today we have reached to talk about the last pillar of financial system, which is financial regulators. So, financial regulators, as the name sounds, as the title suggests, that we are talking about regulating financial system. So, all those bodies which are involved in regulating the financial markets, financial instruments, financial services, etc. of financial system, they are called financial regulators, right? So, financial sector, as we know, is very vibrant for any country. It's actually the most complex ecosystem which really plays a very critical role in shaping the economic landscape of any country for that matter, right. So, the complete economic landscape of the country is dependent on financial system, how effective the financial system is. So, regulation really becomes imperative. And so that is why various financial bodies, they work to ensure there is stability in financial system, the financial system is transparent, is fair, right. So, they do this by governing, by regulating the whole network of financial markets, financial institutions, financial services, financial instruments, right. So, in India, the responsibility of overseeing and regulating the financial system is divided among many regulatory authorities, and each authority is entrusted with specific financial market sectors. So, which all those authorities do we have? I am going to discuss them one by one gradually, because regulatory bodies, they work collectively, they do not work in isolation, they work collectively with one agenda in mind. To agenda is to promote stability, to promote transparency and ensure there is a protection to investors, while they also ensure that the innovation is fostered, the growth is fostered in the complete financial system. So, there are couple of such financial regulators in India. I am going to name them first, and then we are going to discuss each one of them individually in length. The first financial regulator, the primary body, the apex body of the financial system in India is Reserve Bank of India, RBI. Then we have Securities and Exchange Board of India, SEBI. Then we have Insurance Regulatory and Development Authority of India, IRDA. Then we have Small Industries Development Bank of India, SIDBI. We have Ministry of Corporate Affairs, MCA. We have then number 6, we have Pension Fund Regulatory and Development Authority, PFRDA. Then we have National Housing Bank, NHB. We have Forward Market Commission, which used to be there. I will discuss about it. It doesn't have its existence anymore. Association of Mutual Funds in India, AMFI. And then lastly, we have Insolvency and Bankruptcy Board of India, IBBI. So, these are the total 10 bodies which we take as regulators, regulatory bodies of the financial system. So, as I said, I am going to discuss each one of them one by one, and we shall be covering all these 10 bodies in couple of parts, most likely in 4 parts. So, the first part today I am going to talk about two bodies, RBI and SEBI. So, what is RBI, what are its function? I am going to explain all this in next few minutes. So, RBI, Reserve Bank of India, it is an autonomous governing body that ensures stability of price, currency and the financial system in the country. It stabilizes the value of the Indian currency and ensures that Indian financial market is stable and robust. So, the work which has been entrusted to RBI, and for that matter for rest of the countries as well, every country has its own central bank. We call RBI as central bank, we call RBI as bank of the bank last resort. Same way every country has its own central bank, right. So, like them, even our country's central bank, which is RBI, it also ensures the stability of price, and the currency price is stable, financial system in the country is stable. Two very important. It means all other pillars of financial systems which we have, they are actually governed, strengthened, guided, regulated with the help of RBI. And and also ensures the value of Indian currency, which is the most important thing. The currency is stable. For that we know repo rates, reverse repo rates, their monetary policy is there. Every fortnightly the new monetary policy is announced, and RBI actually ensures that the currency is stable. For that, for times they have to increase the repo rate or decrease the repo rate or reverse repo rate. So, they are the tools which are used by RBI to ensure currency is stable, and Indian financial market is also stable and it is robust as well. And then apart from the monetary policy, RBI performs various other fundamental financial functions as well. Broadly it regulates and supervises banks, non-banking financial institutions, and and other financial intermediaries to maintain the strength and integrity of the financial system, because the financial system is integral part of any economic system of any country, right. So, strengthening and maintaining that strength constantly, I mean once there is one small flaw, we all know what happened in 2008. We all know the bubble of that housing finance was the one which is being quoted in the history every day, in every business class, in every economic class we refer to that, how bad that experience we had witnessed in the past, right. So, that bubble is been remembered. So, it's strengthening and constant monitoring, and there is no possibility of mistake, there is no affordability of any kind of mistake in the whole system. The very small part being neglected, the whole system will collapse. It is such a big challenging task, which may sound as a theoretical one line, that the bank has to ensure the financial system is robust, is strengthened, but actually there are so many parts and arms of the system which are to be taken care, and that is why RBI is the authority in this system. So, what all functions does RBI do? So, there are so many functions which RBI does. The first one is it manages credit supply. Number 2, it regulates bank operations. Number 3, it helps maintain a healthy financial system. Number 4, it is banker to the government, and number 5, it ensures issuing government securities. So, let me explain these functions gradually one by one. So, as the first and the foremost function of RBI is to ensure the credit supply, the money supply in the country, right. So, money supply has an effect on inflation. I hope you understand as student of business or as a student of economics, or in general we all understand the demand and supply rule is applicable on almost everything, and so is on money, right? So, so the RBI is the bank which actually ensures the currency supply, the credit supply, when it is money is required in the market for different purposes, the credit is available, the loan is available, and that is actually ensured by the intermediaries, by banks, by non-banking systems, by ensuring money, by increasing money supply, or by decreasing the money supply in the market. So, because money supply affects inflation, money supply affects demand, money supply affects production, money supply affects so many things, including the GDP, right? So, it is our task, it is really a task to be taken care very well. So, that is the first and the foremost function of RBI, that it manages the supply of credit, the funds. Whenever they are in demanded, the supply is there. Excess money is, if being there, the demand is less, you would know how the currency price will change, how inflation would go up. So, these are the things which needed to be taken care. Then the second function of RBI is it regulates bank operations. So, bank operations, there are so many public banks we have in the country. We have private banks, we have cooperative banks, we have commercial banks, we have foreign forex banks, we have so many types. We have Indian banks and we have foreign banks. So, we have so many types of banks, right. So, the RBI regulates all operations, of all type of banks, and there are banks which are just dealing into forex, foreign forex currency. There are banks which deals into merger acquisition, those primary those services. There are banks which are just into the normal demand and normal savings and the credit supply. So, banks, all kind of banks and non-banking financial institutions, they are regulated by RBI. So, RBI has the responsibility, has the obligation to ensure that the interest of people who are depositing, who are taking credit from banks, both, right, either saving with the bank, that is depositing, or taking loans, or taking money, taking credit in different forms, both the major operations, demand and the supply, as well as other non-banking financial services, they are operated as per the guidelines. RBI also ensures that banks, they comply with the guideline. For example, small thing, we know the banks, they charge us for SMS. We know the bank charges us for ATM withdrawals. So, RBI keeps on issuing certain guidelines with pertaining to all those small to big thing on our daily life, be it ATM withdrawal, be it checkbooks issuing prices, or any such service, SMS service, etc. The smallest thing I am taking, right. So, RBI has to ensure that banks do comply with. So, first thing, the RBI issues guidelines for every small to big thing, these small examples to big thing about the maximum amount of the interest payable, maximum amount of interest chargeable, etc., etc. They all are complied with. That is what RBI has to do. Then the third thing, as I said, it helps maintain a healthy financial system. Healthy financial system means what? That the money is not in surplus, money is not short, money is as per the need of the hour, as per the need of the country. This is one thing. All the financial institutions, they comply with the directions issued by RBI or any other governing body. All interest of all the stakeholders in the financial system are taken care. So, this is how a healthy financial system is maintained, right. So, supervision is required, regulation is required, compliances are required, follow-ups are required. There are so many aspects to it. Awareness is there, awareness is required, training is required. So, all these aspects are ensured to maintain a very, very healthy financial system. Then RBI is banker to the government and is actually bank of last resort as well. How it is banker to the government? All banking financial transactions, even government has to pay. Government issues so many funds to different banks, to different stakeholders, different people. For example, certain subsidies are issued to farmers. For example, pension is being paid by the government, different department of the government itself, like state pays to central and central pays to state. We have GST input, the credit input is transferred. We have settlement of different accounts by different within different departments of the government, within state, within central. So, they all are there are millions of transactions happening on regular basis between the departments, within the government to government, government to private, government to public, or government would be receiving. Even for example, if I am paying income tax, I am paying to the government of India, to the income tax department, right. So, that work, the government account is been actually taken care, been monitored by RBI. And it is also a bank of banker to the last resort, or bank of last resort. In fact, in case any bank, because it's regulating banks as well, any bank has shortage of money, is facing the liquidity issue, or otherwise is turning sick or facing financial issue, it comes forward to rescue that bank. So, it lends to banks. That is why we call RBI as bank, or bank of the last resort. So, it is a banker to the government as well as banker to the banks as well, right. Then lastly, it issues government securities. If a government has need of funds, even government does, right, like banks borrow from RBI, or banks borrows from other banks, and companies borrows from banks, and companies borrows from individuals. Same way, government also borrows from individuals, government also borrows for other governments, and government also borrows from people, general public as well. For example, treasury bills, what are they? They are the instruments we discussed during the past when we were talking about financial instruments. So, government issues treasury bill. Who is going to issue that security for government? RBI, right. So, there are so many types of bonds, there are so many type of loans or bonds. There is gold bond, or infrastructure bond. So many types of bonds are issued by government, and RBI plays a very, very important role here. So, these are the major primary functions of RBI. Overall function, the major function, it is to manage the currency, manage the supply of money, ensure monetary policies in interest of the country, and it is interest of keeping the financial sector or financial system healthy, robust. So, these are the functions of RBI. So, friends, now after this I will be talking about Securities and Exchange Board of India, the second primarily or second very important body of the regulation in of financial system in India, SEBI. The Securities and Exchange Board of India is regulatory authority accountable for overseeing the securities market in India. So, with its regulatory powers and proactive approach, SEBI has become imperative in India's economic landscape. SEBI is something which we cannot do without. All the security, especially when I say security markets, means I am referring to equity market, debt market, all financial instruments, that is what is being diluted been taken care by SEBI. So, SEBI operates under the Securities and Exchange Board of India Act 1992, and it has been given widespread powers to regulate various market participants, be it issuers, be it intermediaries, be it investors. So, that is what the SEBI does. So, there are a couple of functions if I have to put them precisely. So, these functions are ensuring investor protection, number 2 maintaining fair practices, number 3 promoting robust and transparent financial ecosystem in the country, number 4 overseeing the securities market, and lastly regulating various market participants. So, let me explain these functions one by one now. The first function is ensuring investor protection. This is the foremost function SEBI is supposed to do. Investors, who are the investors? Shareholders like you, me, or shareholders like institutions. A company may buy shares of other company. A company may buy treasury bill issued by the government of India, right? So, they all are investor. So, SEBI has the responsibility, liability, obligation towards these investors and has to ensure that their interest is protected. There is no malpractice, everything is complied, whatever is issued. So, that is what the SEBI does. Number 2, that this SEBI has to ensure the practices which are there in the market are fair. So, it has to ensure and maintain fair practices for sale and purchase of securities in general, right. So, if I am a shareholder, I have to sell shares. So, for example, if I sell it today and I should be getting the price immediately or as per the guidelines issued by the SEBI that within these many minutes or these many hours your funds would be credited once you sell the share. So, this is what the fair practice is, because there are so many agents in between, there are so many financial advisors who are playing a role. So, it is very important that each party in the financial system plays a fair practice, and that is what the SEBI does. And then of course, another function is to promote robust and very transparent financial ecosystem in the country. So, the financial ecosystem comprises all the arms, all the legs of the financial system, and it has to ensure that the system is robust and its system is transparent as well. Then the overall overseeing, overlooking or supervision is of the securities market, be it primary market or be it secondary market. Security markets comprises both markets, the primary markets where the shares are issued for the first time, secondary market where shares are exchanged, where sold and purchased in open market. So, SEBI does overseeing of both the markets. It means complete securities market. So, this is another function, and the last function is that it regulates various participants, because it is not the investor only. We have banking institutions, which we have institutional investors, we have individual investors, we have agents, we have brokers, so many players in the financial system, right. So, SEBI ensures that all the agents, all the players in the financial markets, they are actually playing their role well, fair and transparently. So, these were the functions of SEBI. So, I hope you were able to understand these two important regulatory bodies of the financial system in India. We shall be discussing many more regulatory bodies in the forthcoming sessions. Thank you very much for being with me. Time to sign off.